really they're getting hit really badly, down 3% across the board. And if we get a really bad close today or tomorrow in any of these things, we're in real danger of really melting down badly. Several people have asked about the new moon, full moon cycle. We bottomed on that full moon on the 15th. We had a pretty good rally for 4 days. And in a matter of just a few hours, just from yesterday afternoon to now, we've given almost all of that back. And if we close below that June 15th low, either today or tomorrow, my guess is we're going to have a really nasty next week. There's two reasons why I say that. The first reason is the fact that we have the new moon coming in on July the 1st, which is a week from this Friday, and it's also accompanied by a solar eclipse, which has a possibility of, being a spike down. But even greater than that is on July 18th, we have several big cycles that are coming together, and that's a real key date. And if we come down hard into that, we've been down 7 weeks already in the market. This is the first up week out of 7, and if we end up being lower this week, that means we could be looking at 8 to 12 to 13 week down. We don't know. Once you get past 8 weeks, it's an outlier event. It can go anywhere. So it's very dangerous being long in this area. I was originally thinking that we would rally up into the July 1st lunar eclipse, which would have been perfect because all 4 of these last cycles have just been like clockwork. But unless we hold this level here and can rally back into it, then it's really going to be really kind of tough. At the end of the break here, I'm going to have Rich Anderson from Anderson Capital Management come in and talk about the grains and stuff because they're getting hit badly, and I think we're going to get a great place to buy corn here in a couple weeks. We got a call from Rick in British Columbia. Are you there, Rick?
Hey, how you doing?
Fine, thank you. What can I do for you?
Hey, I like your dates this time, just because it's window dressing, and I don't know how you can explain, or anybody can explain, when, imagine yourself being a fund manager, and apparently they flip-flop portfolios. You would think that'd be a neutral bias, because, you got to buy something, you got to sell something, right? But it always is a bullish time. So, we may go down for 2 or 3 days here and then rally into what you're just saying there, eh?
It's certainly possible, sure. That's for sure.
Yeah, no, because that would be the end of next week. Would it be? Yeah,
well, we're having good volatility. That's that's something that I really like to see. I don't mind the up and down movement, but if we close below that low on the 15th of June, that's going to be a real negative sign.
Well, and you know what, Larry, the S&Ps have not touched that. The IWM did, and the Nasdaq, I think, tested those lows of Japan, but the S&Ps didn't. So I think that's where we're going, and then and there's pretty good volume down there. So we'll see.
Yep.
Yeah, I'm looking at copper, and for some reason I'm not getting the proper volumes, but it looks to me like copper can pull back to like maybe 360. I always go by when we rally on a monthly chart or a weekly chart. Where did we break on lighter volume to the upside? Even though we had nice volume, when we fluttered above $4, I was just curious where you think copper could pull back to.
I think you've got a really good price there at that 360 level, because if we break much below the $4 level, then that's what I think would be the next spot to look at. We've completed an AB equals CD Gartley sell signal on this last rally up, and then we've started to back off. So if we go below these past lows, then I would say that 360 level would be easy to do, and if we get a real meltdown in some of these things, 320 would be the next spot. So
exactly.
It could very easily, and copper moves, very dramatically. It's one of the more psychological of the metals, so it's something you have to watch.
I slept in this morning, and
well, you're not going to be penalized for that.
I'm on the West Coast here. Okay, I know they threw they're pumping oil out of the reserve. What kind of news came out of Europe this morning? Was there something to do with Spain or Italy downgrades? Or anything out of there?
Rick, I will tell you this: that most people that know me, as I don't listen to the news, I have usually Bloomberg on mute, just in case there's a news flash of some kind. But I actually don't listen to the news during the day. I found country and western music is more informative to me than listening to the people on Bloomberg and CNBC. So
I don't trade off the news either, but when I see the euro going down on volume, which is more important than any news to me, like you just mentioned, but I still find it interesting to see why, which country is it,
Well, the news follows the trend, and the other thing about the volume in the euro, Rick, it's very difficult to determine that volume because, the banks don't report volume like they do in stocks and commodities and stuff like that. Those 13 major banks that do most of the currency trading, that's a close-knit club, and they don't let you know what the volume is. If you're watching the tick volume of the trading, that'll give you some idea, but the actual volume is, no one really knows because they're all operate separately.
Mm-hmm. So if I think we're going to do a retest of the 140 on the euro, but do you see it going down before we bounce possibly to the 138 level?
Oh, I see 138 easy, and below 138 is par. I mean, you could go to 100 and below par. It's history. If they lose Greece and then they lose Spain, then it's really going to have trouble because it's basically Germany that's holding it all together. And if Germany wavers in any way, if someone plays chicken and somebody drives the car off the road, it's over. And many people said the euro was a exercise in futility from the very beginning, and I felt that way too because you can't get two people to agree on anything, let alone 20 people. It's lasted a lot longer than I ever thought it would. It started around.
It sounds like the U.S. Congress or Senate with the debt ceiling.
Oh yeah, that's true.
Okay, you take care.
That's a good analogy.
Okay.
Yeah, thank you very much for calling in, Rick. Someone asked a question about crude oil, and crude oil hit a real major support today. We took out the stops at $90 a barrel, and that was the 786 off of our last move. That's a real critical level because if we close below $90 a barrel in crude oil, that's going to be an indication that we're really in bigger trouble in these commodities than we might thought. The second alternative here is that we're just in a just a little quick corrective phase, and it's giving us a great chance to buy some of these commodities, but we'll have to wait and see. I'm going to have Rich Anderson on after the break to talk about some of the things that are going on because he's has hands on this stuff every day, with cash markets and hedging and everything else. He'll give us an idea of some of the things that are happening. He alerted us, when we had that big bullish report, in corn last week, 2 or 3 weeks ago. And, it looked like it was, making a blow off top, which it certainly has. And now the spreads between the July and December corn have narrowed in, which tells us that demand has weakened up just a tiny bit. So, but I really believe we're going to get a really good buy in the corn market sometime over the next, my guess would be the next several weeks. It would be the thing that I would be watching, most closely. And that's one of the trades that really would, give me a really good time to put out a special report because we have about 18 cents lower. It's December corn, which is the one we're looking at. It's trading around $6.30 a bushel now. At around $6.12 a bushel, it completes a very large AB equals CD, and we have some really nice cycles coming in around that first week to second week in July. So we'll have a pretty good idea of what's happening. What's interesting about the corn is that we've had 75-cent corrections since last December. This is the first time we've exceeded the 75 cents per bushel in the corn. So it'll be quite interesting to watch this next low as it comes in. It might even be lower. We'll just have to wait and see. What we'll do on this is we'll try to match it up with some of the the astro dates because the astro dates work very well in corn as well as they do in the stock market. So around the 1st to the 18th, we'll probably be watching corn, to be a buyer of that. This is the first week in July. We've got all of July, August, and September is the growing season. And believe me, folks, I've been trading for over 50 years. I've never seen a year when we didn't have at least one crop scare. So even if the market is bearish, it still have a pretty good rally from that level. So we'll just wait to try to find the best price that we can to to pick up the corn if we're able, in fact, to do that. My main focus right now is what's happening with the stock indices, because if we break below those lows on June 15th, that really tells me that the market is incredibly bearish, and the reason for that is we could only rally to the 382 retracement. We had a guest on yesterday, and he was short the Russell because of the 382 And, I felt that we would possibly make the 618 retracement into the July 1st high. We still might do that because if we hold these lows, then there's still a chance of doing it. But if we break that lows, that's tell us the market's extremely bearish. And longer term, folks, it looks very, very bearish long term in the stock market. I'm talking into the fall and, things like that. And we haven't really had a really bad meltdown until other than that May flash crash of May the 6th or 7th of last year where the Dow dropped, I believe, 1,000 points in one day. We really haven't had anything, like that happen since 1987. And one of the keys to these markets, if we do have a meltdown like that, the real key will lie in the Forex market. The spreads between the euro and the U.S. dollar and the pound and the U.S. dollar and the euro and the yen, all of these spreads that run usually 2 or 3 pips will widen out to 3, 6, 8, 12, 15, even 20 pips. In other words, the cost of entering the market becomes incredibly great, and that's when it really makes it difficult to enter the market. But you're going to have to try to find a place to get short some of these things if, in fact, we do get ready to melt down. In 1987, when we had the big crash on October the 19th, it started that Sunday night in Hong Kong. Secretary Baker, James Baker, came on and said they were unable to make some type of an agreement. I forget what it was. And the U.S. dollar got trashed. The equivalent, the Swiss franc moved 250 points. That's a huge move. I mean, it's equivalent to Dow moving about 3,000 points that night. And that triggered the whole thing of the big crash of October the 19th of 1987, which was the biggest down move we've ever had in stocks. Rich Anderson's going to be on at the break. If you have any questions, it's 877-927-6648, and we'll have Rich Anderson of Anderson Capital Management come on and talk to us about some of these commodities that are growing in the fields as we speak.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, this is Larry Pesavento with the Futures Hour for TFNN, and we have Rich Anderson of Anderson Capital Management from Minneapolis, Minnesota, Naples, Florida, and points unknown. Rich, are you there?
Yes, I am. Hi, Larry.
How are you doing? What's happening with the grains, Rich? We're having quite a bit of sell-off the last couple of days. Is it related to margin calls or just overall liquidation in commodities, or is there something deeper?
Well, on Tuesday we had a bit of a rally, okay, and that was on ideas that a regime might set up in the U.S. Midwest, which would inhibit rain. We've been having rain like crazy virtually every day this week, and turn on the really hot weather, kind of like the drought they've had in the Southwest. And then it didn't verify the next day, so everybody got in on Tuesday, got out, hit some stops, and then there was just a vacuum. No buyers, just sellers. And then that caused the market to be limited down. And then this morning it opened lower, and they flushed the market out some more. They've taken the risk premium out of the market as people have just bailed out.
Well, Rich, I was looking at this technically, and it looks like we're forming some really nice support levels in wheat and corn here. And if you're going to be a farmer, this would be a place to put your farm utensils to work, in my opinion, because we're pretty good support in that $6 area in wheat and also in corn, aren't we?
Absolutely. In fact, I farm in South Dakota. And I have neighbors that have bought back their hedges and are buying the board because it's too wet, didn't get planted well, and they know they're going to have a problem with their crop. The key report is June 30th when the acreage report comes out. I'll happen to be in Vegas that particular day, but that will be a big report next week. No matter what the government says or doesn't say, it's how the market acts on June 30th that tells you that we're cheap enough. And then the first sign of weather again, and this thing will go vertical.
Okay.
I agree. But first you got to find out where's low enough, and everybody's flushed out their positions. It's all about money flow. We've talked about that several weeks ago. We talked about money flow. Once it stops, the market stops, and once it gets out, it turns the other way. I said last time I was on that probably the best thing that had value was the hogs, that they had more value than the corn. Well, the hogs have continued up even though until the last yesterday and today because it was cheaper for people to be buying pork if you're overseas rather than the corn.
Rich, when we first started this business, we've known each other for 40 years. There was no funds for hedge funds for commodities or anything like that. The influence on these markets now are huge with these funds in the market. Am I correct on that? Because it seems like they're throwing huge numbers at these markets.
Oh, it's just unbelievable. I mean, we have weeks where you liquidate 60, 70,000 contracts of corn. That's massive, and once it starts to happen, everybody knows it takes about 3 days for the funds to get their position on or off, and so they just step back and let it find a level. And the commercials, used to be a much bigger player as a percent of the total market, but now it's these massive funds.
Yes. So they've basically taken over where the commercials like Conti and some of the Cook Grain and some of these other grain companies that we had. Cargill. Yeah, Cargill was always very big. So, well, what do you think as far as the outlook for corn? You're still relatively bullish corn for the crop year, and as you said from when we went one of the first times you were on, that you never go a year without at least one crop scare. And we're coming in the 4th of July where the corn's as high as an elephant's eye. So are you still bullish longer term?
Well, the demand's there. The vote last week by the Senate on the ethanol, that was symbolic. The subsidies will end at the end of the year, but, with the percentage of blending, there's going to be plenty of demand. Actually, ethanol production was up 21,000 barrels last week. Yeah, I'm still friendly, and I think any weather December corn's the place to look. When I very first came on, I told you that December corn would be trade to July levels. Well, that's kind of occurring, but it's the July that's come down. I fully expect that these corn, if we have any weather problems whatsoever, will be up testing its highs again. And the other one that we had a dickens of a time getting in is spring wheat, Minneapolis wheat. And
is that still showing a big premium?
Say again?
It's still showing a big premium in Minneapolis wheat?
Yeah.
Okay.
And it's come down like everything else, but any weather, the wheat got planted late, and so when it's in the milk stage, if the heat comes in the milk stage, all you get is straw. And
okay, Rich, we've got a break coming in here. Sure. Thanks for joining us, and I'll have you on in a couple of weeks if you don't mind.
All right, sounds good.
Thanks a lot for coming on. 877-927-6648.
Tiger University and Bud Rolfs are pleased to announce Bud's new course, The Challenge of Channels, June 29th at TFNN.com. In Bud's previous Tiger University webinar on the power of PTRs, Bud unlocked the visible horizontal forces of support and resistance called primary trading ranges. Now, he adds the all-important visible diagonal forces of support and resistance called channels. Together, they can give you a comprehensive vision and understanding of the price movement never before possible. Stop flying blind in the fog of the marketplace. What good is a blank chart without the roads marked for you? With the knowledge that Bud gives you in his Challenge of Channels webinar, you'll go from lost and staring at a blank map to drawing the map on likely future stock price moves. Make the best investment possible, an investment for you. Go to TFNN.com at the carousel. Click the Challenge of Channels.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to TFNN.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011 and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, folks, we're back. This is Larry Pesavento for TFNN doing the Futures Hour. And one of the questions that I had come up during the break, first of all, I wanted to thank Rich Anderson for being on and giving us his views on what's happening in the grain markets. I've known Rich for 40 years. He was a kid when he started this business. He was a teenager, and he certainly knows, what's going on. And I agree with him that we're going to have some really great trading opportunities in the grain markets as soon as the selling is over. And as we spoke, the hedge funds are now liquidating some of this stuff. So early in the week, we're going to be looking at a place to possibly buy some calls in both wheat and corn, because you can't go a whole year without some kind of crop scares. And believe me, they're having crazy weather all across the Midwest, and even here in Arizona, we hit 112 yesterday in Tucson, which is unbelievable. And it was so hot in Phoenix, Arizona, that they had to stop planes flying out of Phoenix International Sky Harbor Airport because there was not enough enough cool air under the wings to get the planes to lift off. So that's how hot it's been. Of course, we don't have any crops here in Arizona with the exception of cotton, so we'll have to keep an eye on that. The question that someone posed was when I talked about the crashes when they occur. And believe me, crashes are very rare, folks. Don't hang your hat on trying to pick a crash, because if you're lucky, yeah, that's great, but they only happen once every generation usually. The last one we had was 1987, which was 24 years ago. We're due for another one, but whether it occurs or not, all I'm saying is that if we go below that June 15th low, and we close badly on Friday, the odds are that we're going to be down really hard into the 18th of July. That's all I'm saying. I'm looking for a place to get short. Ideally, what I'd like to see is the market to hold this level like it's had so far today. We stopped at the 61% retracement in the NASDAQ of the June 15th low, right to the exact tick. And if we can hold that and just have a minor rally here over the next few days, taking out the high we made yesterday, that would set up a beautiful AB equals CD pattern that would be a great place, to look to go short. However, if we do close badly, and then that's always a possibility, then we have to be aware that there's something happening. The question, I'll get back to it, I sometimes rant around, and that's just because I'm not a professional speaker, but the main thing that I talked about with the currencies is the fact that they're the ones that really tip off that there's going to be some increased volatility or spread crash type environment, is because the spreads between the currencies, between the U.S. dollar and the euro and the pound and the euro, and all of them, the euro, yen, Canadian dollar versus New Zealand, there's actually 22 major cross rates, and these spreads will widen from usually 1 to 2 pips normally. Sometimes they go out to 3 or 4 in a normal market when it's relatively thin, but when it gets really crazy, those spreads will go out to 10, 15, 20, even 30 points in the British pound sometimes. So when that happens, that's telling you that money is scared and it's moving quickly. And that's what gives you the tip-off that something is going to occur. When we were on Wednesday's show, we were talking about the possibility of getting short the euro at the 144.60 level, and we got to 144.47. We missed it by about 17 pips, and it's broken more than 300 pips. And someone says, what do you do in that situation? Well, frankly, I mean, after it hit that level, it's been straight down, and there's nothing you could do about it. So you missed the trade. That's the way I look at it. I have nothing else I can do. Anyway, I've got a little break coming up here. If you have any questions, it's 877-927-664. When we get back, I want to talk a little bit more about the currencies.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, this is Larry Pesavento with TFNN on the Futures Hour today, and one of the questions that we had during the break was about the Treasury bond market, and as we've been talking about it for the last 7 or 8 weeks at least, that we've completed this big AB equals CD pattern in the T-bond market, but I've always mentioned that we have this outstanding fear that we might have a flight to quality in Treasury bonds, which I think is a major oxymoron, but the market has still got back to that 126.10 to 15 level, where I think it should be shorted. But frankly, coming into this big cycle low that we have now, we'll have to wait and see. We're still long the TBT future, the TBT ETF. but we're in danger of getting stopped out on that. That would be $1.50 loss because we bought it at 34, and our stop is at 31.99. So it's very, very close, and I prefer to be out of it if we get there and look at it again, because you could get a rally all the way up to the 130 level on some crazy, move of, and believe me, they can even go crazier than that in that market, because if people believe that there's a real sense of a flight to quality, that's in fact what they will happen. Everyone talks about, Bill Gross from PIMCO being heavily short Treasury bonds. There again is a case where you don't want to believe everything that you hear and read, because they actually don't tell people, what their position's on. They use head fakes a lot, and George Soros is the master of that. But PIMCO is the same way. I mean, they use the same strategies that everybody else uses. They have to have liquidity, get in and out of the market, and they use their influence and power to give their views and stuff, and that, basically is a little different. The big advantage you have with listening to me is I'm just a really small apple on the tree. I'm not even an apple seed compared to these guys, and all I'm doing is I'm just looking at the charts. I have no idea about the fundamentals of these things. I quit looking at that 40 years ago. My whole premise is watching the bar chart. If prices are going up, there's more buyers. Prices going down, there's more sellers. You can, massage it any way you want and give you all the excuses of why they're going up or down. But really, the question is that's what the real bottom line is. We've only got about 15 minutes left in the show, and I want to review where we are, because this is really critical, folks, because we've had this big sell-off in stocks and commodities in the last few days. And if we do close badly on Thursday or Friday, I keep repeating that I think we could have a really nasty way down into July 1st and all the way into July 18th. So try to position yourself some way. One of the things I'm watching is the SDS, the double-weighted short S&P, and if we get above 23 in that, I would say, you just about have to be long that thing, because it could easily go to 33 without even, batting an eye. We had the first part of that move, which was good. This is about where we got out of it. And I think that if it gets above 23 again, you just about have to go in and, put the safety belt on and just hang on, because this could be one of those times that it gets very, very nasty. But we have to have that bad close. I mean, so far the market is held at the 618 on the NASDAQ. It's held at 786 on the S&P. It's gone a little bit below the 786 on the New York Stock Exchange Index, but this is intraday. The close is what's really important, because that's when the tally comes up on people's equity runs and where the losses are and stuff, and that determines what's going to happen. Come in. You don't want this market to close right on its low on Friday, because, folks, I do not believe it will open higher on Monday. So that's the main thing I'm looking at. We only have a 4-day week next week, I believe, because of the holiday. And no, I believe the holiday's on Monday. So we do have a full week next week, but next Friday, the 1st, which is the day of the the solar eclipse and the new moon, will probably be a shortened day for some of the commodities. It'll be regular for stocks, I believe, but it'll be shortened for everything else. I'll double-check that as we come into it. So this is a critical time, and the reason why I'm not just saying for putting on new short positions. I know a lot of you folks have equity positions that you have on, and you should be real aware that if we do have this bad close, is to try to protect yourself, buy a put or something. The worst is that I'm wrong and that insurance would cost you very, very little. But, I just think there's a possibility of it happening. I'm giving it a probably 20% possibility of a real meltdown occurring right now. But if we close lower, that probability goes to 80%, and that means it will be down hard into July 1st and also possibly all the way into July 18th. All you have to do is go back and look at the weekly charts, and you can see that we've had these, monster down moves before, but we haven't had these recently. The market's been pretty much in a straight-up move, since March of 2009. And, we were up, I believe, I think 10 months in a row, if I'm not mistaken. It was some ungodly number that we hadn't seen before, so that we really will probably get ready to, have something different happen. So that's what we'll have to be able to see. I keep getting messages about the lunar thing, because it's been working so well since February 21st, and it still could be working because we haven't taken out the lows. June 15th. But if that does happen, it just tells you that there's another larger cycle that's out there, and we do have that big one on July 18th. I'm really expecting a spike low in the market around that July 18th time frame. If you go back to 2010, in 2009, we had a really strong buy signal in July of 2009 because we had a beautiful AB equals CD pattern coming in right about that same time. That's part of that. It's part of the 2-year cycle, but there's 4 other cycles that are occurring at that time on July 18th. So we have to watch that really, really closely. And my assumption is that we're getting ready to, come down into that. The ideal situation here is that we rally, we hold this level that we are right now. Today happens to be nothing more than a little sell-off, and we hang in there next week, and we rally into July 1st, and maybe even take out the highs we made a few days ago, which would not be hard to do. That would be a beautiful Gartley sell signal coming in at a perfect time relationship, and I would be all over that one. That would really be nice. But in case we don't get that, you have to, this is probabilities. It's no certainties. So all we're doing is trying to, outlie what's going to happen. I spoke a lot last night with Dr. Miller, and she has a very uncanny psychic ability. I don't know where it comes from. Maybe it's the 90 years of being on the planet and trading for 65 of those, but she has a really weird feeling about the market right now, the overall stock market. She really thinks there's something ominous coming down the road just by looking at the charts, nothing with astrology and things. And someone with that much experience, you have to sort of respect it. By the way, her birthday was the same as birth date as W.D. Gann, which we've always joked about. So I always used to refer to as Mrs. W.D., but thank God she's feeling good, and at the age of 90, we should all be so lucky. Anyway, we have a break coming up, and then I want to wind the show up with a little bit more of the commodity markets, especially the wheat, corn, soybeans, because that's where the real food comes from and the breadbasket of the world. 877-927-6648 if you have any questions.
For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, this is Larry Pesavento for the TFNN Futures Hour, and I wanted to, we've spent a lot of time talking about stocks and things, but we really need to keep our eye on the wheat market and also the corn market, because we're completing some really nice support areas here. We've already had a 17-cent rally in corn since we came on the air, and you know, that's just nothing more than the wild volatility we have. And we had 50-cent move yesterday, I believe, and this is nothing more than short covering, in my opinion, of you know, these things. So we're having wild swings in everything today. Across the board, if you just go look at anything, it's just mostly red everywhere. But with this big move down, there's a big probability that we have more to come, especially if we close poorly today. I can't emphasize enough how important it is to realize that the close today and tomorrow is going to be very important in stocks. And believe me, the fear factor, that volatility index, it does work very well. There's times that it doesn't work and people give it a bad mark, but it can really spike very, very quickly when people get a little bit of afraid. Whether it's related to the Greek thing or whatever is happening in Europe, I have no idea. The currencies are telling us that the dollar is strengthening, and you know, we could easily see the euro come unglued some morning when you walk in, and you know, it's just absolutely, you know, in the trash can. But you know, whether that'll happen or not, I don't know. All I'm trying to alert you to is the fact that to keep an eye on these spreads on the currencies. And if you're not really following the currencies very much, all you really have to do is to you know, to watch the Bloomberg or CNBC, and they'll give you an idea when they show the cash markets come across. You'll see that it'll be trading at 141.37, and the next one will be trading at 131.67. In other words, it'll be 30 pips sometimes in between trades, and it'll be going down very, very fast or going up very, very fast. That's how it usually operates. So you keep an eye on that. What I usually do on Sunday nights when I come in is I watch to see what the pip spreads are doing right off the bat. I have a program that follows that, and if we see these spreads start to widen, it's telling you that, you know, money's moving quickly, so you try to get in the direction of where that money is really you know, getting ready to move. So you know, we've got a lot of opportunities coming into us into late June and early July, and I hope we're going to be able to take care of some of these things. And what I'm going to try to do is, because I know a lot of you don't have huge amount of capital to risk, is maybe we can find an option in either corn or wheat. If you remember, last June we bought some wheat options when wheat was trading at around $4.50 a bushel, and those options went doubled in price. We didn't, of course, take the whole thing, but we made a very nice $2,000 move on an option that only cost $400 in a matter of a few weeks. And so those are the kind of things that we're going to try to look at over the next few days here. Remember, when you're dealing with futures market, you have the opportunity to become a farmer. The only difference is you don't have to work your 12-hour days. You don't have to go to the bank and get a loan, and you don't have to buy the heavy equipment. You don't have to worry about the weather and stuff like that. You're just able to buy the crop, either sell it in the next 30 seconds or keep it for the next 2 or 3 months. But that's the real advantage of being in the futures markets, is you actually become a farmer, and that you're able to participate without any type of risk compared to what the actual farmer does. However, he has his land, which goes up in price. So there's another thing that you don't have that the farmer does have in his favor. But it does give you the liquidity and the fact that you can participate in some of these markets. We're ending the show now, but we're going to be watching it really closely, because next week when we come on, we're going to be really close to some major support, and this is what we'll be looking for. So thank you for joining me. Everybody have a wonderful weekend, and I'll be back on the air on Monday at noon.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry